throughout history, in every period of crisis, gold has always become money, and that's why you should always have a bit of your money into gold and silver, of course. Also, silver has obviously massive potential on the upside because of it's cheap in relation to gold.
Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira, part of the outreach team of Silver Bullion here in Singapore, where we want to help you truly secure your wealth. Egon von Greyerz joins us today. Egon is the founder and managing partner of Matterhorn Asset Management and Gold Switzerland, based in Zurich, Switzerland. And Egon forecasted the present problems in the world economy that we're seeing today back in 2002. And despite his start as a young banker in Geneva and thereafter finance director as vice chairman of a FTSE 100 company in the UK, Egon knows all too well why we should have assets outside of the banking system, such as gold. We're delighted to have Egon join us once again today. It's time to saddle up and silver up for Egon von Greyerz. Egon, welcome back to SBTV. How are you doing?
Patrick, very good to see you again. I'm very well, thank you. And in spite of the problems in the world, we have to navigate through this one way or another and help people to protect the risk and protect against what we see coming. And that's what we're here for.
Amen. Completely agree with that. You're looking pretty. You look younger. Whoa, what have you been doing?
No, not really. I don't know. It's not the haircut. That was a few weeks ago. So, well, I don't know. I'm just trying to balance, the enormous risks and problems we see in the world, which are of a proportion never seen before, and balance that with having a normal life and not letting the all the clouds above us be too much of a burden on our personal lives. And because things that you can't do anything about is no use worrying about. We of course you do what you can, and thereafter you continue with your life and you help the people that you can help, and then enjoy life. Life is too good not to enjoy. As I always talk about, as you know, three things in life, like nature behind me, the sea, the mountains, the forests, etc. That's or books or music, whatever people like. I mean, there's so many good things in life and so many good people. So let's enjoy that rather than to worry about the things that we spend most of our time analyzing, Patrick, every day. But we make clear that there is a massive risk. At the same time, life must go on for all of us.
Okay, well, that's a pretty good way to start off. I mean, it's nice to actually talk about some calm and peace for a change, but that's going to be short lived. We got to get into the problems of the world.
Yeah.
So I'd like to start off by asking you about the ECB and its raising of rates. What are you seeing in Europe with rates going higher than they've been in quite some time?
I'm pretty clear about where we are on interest rates and inflation. I would say that the central banks, because they haven't got a clue, as we have discussed before, Patrick, when interest rates were zero, negative in Europe, and inflation was zero, they were fighting hard to get it up to their target rate of 2%. 2%, of course, is a meaningless figure. We don't want any inflation. A good economy should have no inflation. 2% means that prices double every 35 years. So that's not a good figure either. But anyway, they never managed to get it up to 2%, and all of a sudden it goes up to 7, 8, 9, 10%, depending on the country. And food inflation goes up to 20, 30%, and fuel inflation also. So, they haven't got a clue. And then, of course, they call it transitory. It's not so temporarily now, by a bit of manipulation and a bit of correction to the trend. Inflation has come down a little bit, but the ECB is determined that they're going to get it down to their 2% again. Of course, they'll never, in my view, get it down to 2%. And if it miraculously would come down temporarily, that it would straight away bounce back again. The interest rates, we had a long trend from 1981 to 2020 of falling rates from 16, let me take US 10-year, 16% to in 81 to 0.5%. And then now we've seen the trend going up. And that to me, we have at least, that was a 40-year downtrend. Previous cycle was a 30-year cycle. Whether it's a B30 or 40 or let's say even if it was only 10 years, interest rates are, in my view, going to go up for a long time. And that's an indication also that inflation will stay high. Energy prices are not coming off more than temporarily because there is a problem with energy in the world. There is not enough energy. Number one, but more importantly, the cost of producing energy from energy is increasing. And therefore, we are going to see increased energy costs. And then you have this movement of electric cars and all of the things that the world governments, which is more political than in anything else, because it's not actually saving much for the environment, in my view. But nevertheless, you have that movement, which is going to be costlier, and therefore we will have high inflation, in my view, for an extended period, and much higher than we're seeing now. It's going to bounce back up again. So and people are suffering in Europe tremendously, of course. Food prices extremely high, and people can't afford to buy normal food anymore. They buy cheap food, which is obviously bad from a nutritional point of view. Their interest rates are going up on their mortgages, or their rents are going up. So things are very tough in Europe. In Germany, in France, in the UK. And in Sweden, where I am right now, I mean, it's the same there. Of course, people, the effect is gradual and doesn't happen overnight. We don't see thousands of people homeless in the streets yet, because there is a safety net protecting people in the short term. But people clearly are not spending the amount of money that they have, and people are finding things tough. And I think that's just the beginning, Patrick. So overall, this is what we have been saying and expecting. It's happening, and it's happening in Europe. Really hitting people badly. And of course, there isn't any good, strong leadership anywhere in any country. There's no statesman around in the world at all today. So no one is doing anything about it. But there's nothing to do either, because this is the end of an era that we have talked about for a long time. If you create money out of thin air for extended periods of, let's say, 50 years or so, in the end, you have to pay the piper. You actually there are consequences, and sadly, most governments and most central bankers don't look at consequences. They just take short-term action, and they're short-term thinkers. But we will have a long-term problem here, Patrick, a very long-term problem of high interest rates, high inflation, declining economies, declining income. It's going to be very tough for people, and that excludes looking at the geopolitical side also. So that's where we are here in Europe. Not a good picture, but if you look at people on a daily basis, some of there is not misery yet, but it's certainly going. Hopefully not in that direction, but it certainly is. People are going to have tougher times. There's no question about it.
If you're enjoying this interview with Egon von Greyerz and I, please consider subscribing to our YouTube channel. And did you know you can collateralize your gold and silver while retaining full ownership of your precious metals with Silver Bullion's secured peer-to-peer loan program? To learn more about this, please go to www.silverbullion.com.sg and look for the P2P loans tab. It's interesting. All the points that you just laid out. I had recently spoken to Dr. Mark Faber, and he said the same thing, where he expects the inflation to continue to go up, and he expects inflation or interest rates to go up as well. And that kind of brings the question where, as these rates go higher, businesses start to slow down a bit. And we may start to see recessions coming on in. I mean, do you see this as well, where recession may be coming on the horizon?
Well, Mark Faber is a wise Swiss, of course. I'm also Swiss. I happen to have two passports, as you know. I'm Swedish also, but let's be Yes, I mean, I agree with him. Yes, things are going to get difficult. Of course, we're going to have recession. I think we're going to have a depression at some point. Um, it might initially be a hyperinflationary depression, but and then it could be a deflationary implosion at some point. But the reason is simple. We have just created a bubble of proportions, of global proportions that has never been seen before in history. And you cannot, for more than a very short period of time, live on money that has zero value, which or can create debt in order to improve your standard of living. At some point, as I said before, you have to take the consequences of that, and that's what we're going to see. And what we saw in mid of March, first in the U.S., what the Romans call the Ides of March, which is middle of March, which was obviously a period where that was the time when Caesar was killed, and that's what we refer to Ides of March as an ominous period. And interestingly enough, the four banks in the US, starting with the Silicon Valley Bank, they crashed around the 15th of March. So that, of course, now the Fed said in their latest statement the banking system is sound. Well, they can't say anything else. They can't say that we think the banking system is going to collapse because that's what they are afraid of. But they have to support it with words because they can't support it with more money. They can't, the printing money, worthless money, to save banks that are already have balance sheets exploding with worthless money is not going to help the situation. Of course, at some point they will do anyway because they don't have any other remedy. But the banking system, the problem that we saw in the middle of March temporarily now stopped. And then, of course, we saw Credit Suisse collapsing in front of our eyes and being taken over by UBS, forced takeover by the government, Swiss government, really, and a bit of assistance from them. And not the same problem as the American banks, but nevertheless, it's the problem that we have in the banking system. Just lots of bad loans, lots of bad investments, mass, aiding financial speculators, like in the case of Credit Suisse. This was helping hedge funds and investment companies, etc., with massive leverage, which eventually all imploded. And this is what Credit Suisse has done and lost billions and billions in the last 20 years or so. But that's across the board. And now the banking system was, which we saw in the American banks. The banking system was assuming low rates forever. I mean, that's just ridiculous. So that they're borrowing short term, and then lending long or depositing long, and of course that's a disaster when rates go up as they have now. So the banking system is under tremendous pressure, and they have to reduce their balance sheets dramatically. There's pressure from the Fed, on a daily basis almost for US banks to reduce their balance sheet, and it's the same here in Europe. And the consequence of that is obviously that you already have companies that are under pressure because they haven't got enough cash flow. And then you take specific areas like sectors like the property companies, commercial property, both in Europe and in the US, are under real pressure now because they have borrowings, which are getting costlier by the day, and they are standing with a lot of empty properties. So that's another sector which is going to have, or which is having real problems now, and that will increase. So all of these things, Patrick, is going to, that will be the initial catalyst for the financial system and the economies turning down. And I think the banking problem that will be linked to that will be enormous. So I still expect we will have many more bank collapses and therefore much more support by central banks and more money printing. more expanding credit just to save the system. But in the end, sadly, you can't save a debt infested system with more debt. So in the end, I think we will see some kind of implosion. But before then, yeah, there'll be some very tough times ahead of us.
Yeah, I was going to excuse me. I was going to ask you about Credit Suisse, and I mean, because it's such an institution, maybe even a national institution. I mean, what was the sentiment on the ground for just even the average person to see that bank go down? And I mean, I guess you mentioned you see others as well that could be in trouble.
Well, it's just unreal, isn't it? Because if you take the Swiss, you have the two pillars of the Swiss banking community, the UBS and Credit Suisse, and no normal person, whatever, expect one of those banks to go under. Now, Credit Suisse, was obviously saved without clients losing money. Some investors lost money on the bonds, etc. But the individual depositors didn't lose any money. So overall, they didn't see actually the underlying problems that the bank could have gone under. But I've been writing about Credit Suisse for years, saying that the risk is enormous because of all the bad investment decisions they have been taking in the last 10 years or so. But remember, before that, in 2008, it was UBS that had to be saved in Switzerland. Talking about so the bank that took over Credit Suisse, that had to be saved in 2008 because they were under real pressure. The I talked about, and of course the U.S. banks are now better because all of the major banks in the U.S. were on the verge of going under in 2008 and were miraculously, I would say, saved by central banks and a lot of money printing and governments, etc. Uh, and now, as I've argued many times, Switzerland is politically is the best country in the world, and their Switzerland's finances are strong when it comes to low debt and virtually no deficits. But when it comes to the banking system, it's much too big for the country. So the Swiss banking system is as bad as any other banking system, but with the additional problem that it's too big for the country. And you know that the Swiss National Bank is like a hedge fund, and they have positions, currency mainly, and investment portfolios that are greater than Swiss GDP. And that the Swiss National Bank shouldn't be a hedge fund. You take the Fed, they're only their balance sheet is just 20% of GDP or something, of US GDP. So yes, there is a therefore I've been saying, like you have in your company for years, protect your assets, protect what you have. Don't put your money into the banking system or just whatever part you need to transact and live for the day, but don't keep your savings or your investment money within the banking system. And that doesn't just mean bank account; it means also custodial risks if you hold stocks there, etc. Because everything is at risk. Now, of course, 99.5% of the people um, don't worry about this. They think that the government will always save the banks, but I think they should worry, as your company and our company saying, we're here to help people to preserve wealth. We're not here to sell them a product or anything. We care about what's going to happen to the system, and we worry about the risk coming. That is here today, and as we know, you can't protect afterwards. Against the risk. You can't buy fire insurance when the fire has started, and there will be a fire here. There will be a massive fire, and I could see bail-ins coming back, especially in the U.S. Because they need the money. The government is. If you take the U.S. government, which is the biggest borrower in the world, sovereign borrower, they are running constant deficits of now trillions, and it's going to get worse. Uh, how do they get the money? By issuing treasury bonds. Who buys the treasury bonds? Well, before you had foreign nations buying them. You had Russia, you had China, you had a number of nations around the world Japan is a big buyer also. Now nobody buys US bonds anymore. Nobody wants them. The people are selling or not buying. A lot of people have liquidated. Some still hold. Japan still has quite a few. China had, but they're all reducing. But it means that for the additional requirements that the United States will need, which is in the amount of trillions, there are no buyers except for the Fed itself. So you're issuing money and you're buying your own money basically, and that's a Ponzi scheme if you've ever seen one. So this is and Europe will be similar because who the hell wants to hold government bonds? They're never going to repay it. In the end, they're going to be on for 50 years or 100 years, and there'll be there'll be moratoriums, and people will never get the money back, and the money they get back will be worthless anyway. So that's going to be a problem to finance the all these governments that spend money that they haven't got. That would be a major problem in the world, and that's another reason, not to keep money in the banking system. Because I could easily see, as I started with saying, that the U.S. banking system, for example, that they force people. They say, well, out of your deposits, we will take 50% you have to invest into government bonds. And that's for a 10-year period, for example, and we'll pay you a good rate of 3 or 4%, while money's losing value about 10% a year or so, but we'll pay you 3-4% for that. So there'll be a forced saving into U.S. Treasury debt, and potentially that could come in Europe also, because governments need the money, and there are no willing major investors who will put money into the government today, and especially not the US government. And therefore, I could see that coming. So therefore, again, it's a reason not to keep your savings in a bank. So there'll be people don't realize that. We know that only 0.5% of world financial assets are in gold today. Be a lot more in coming years. That's for certain. But people should think about the risks that they're actually looking at, the enormous risk, and start worrying about protection, Patrick, because if they don't, they're going to be very, very sorry in a few years' time.
Egon, I'd like to ask you, coming up in August, the BRICs are talking about a type of a gold-backed currency. What's your opinion on this?
Patrick, I think that's much too early. This is premature to expect, a number of nations going up to 30 eventually, agreeing on the currency and then agreeing on the gold backing. It doesn't happen that quickly. And it's going to be, anyway, if it happens, a very cumbersome system. So I don't obviously they're going to work towards that, and many of these are commodity-based countries, so they will have a lot of their traders that will be in commodities, and they will have gold there in the background. I don't expect to have a gold-backed currency in the very short term. It's much too complex. But what I expect instead gold to become is the reserve of central banks, the reserve currency, because and that's much more likely, because that's not a consumer thing, or backing a currency with gold. It's really backing the central bank reserves with the only money that there is that has a value today. And because they've always held their reserves, central banks, in dollars until now. But nobody except for the US, that actually doesn't have any dollars either. It just borrows dollars because of the massive shortage. But otherwise, the US, by confiscating sovereign nations' central bank holdings like Russia, and this will be unacceptable to the whole world, or is unacceptable, because why should you hold your money in a currency that can be confiscated by another country? And therefore, and there is, because of the massive need for issuing treasury bonds, and then the dollar is going to, and very few buyers of these bonds, the dollar is going to decline more in value, and therefore I therefore holding dollars as your reserves is absolutely crazy. So I see instead that central banks will have gold as their reserve, and between central bankers it will be gold rather than dollars that you hold. And of course, there is not, even if the US had 8,000 tons, which I don't think they have, the US government, and China only has officially 2,000, and Russia only 2,000, etc. Germany a bit more, but that's not, at that level is not enough to back countries' reserves. So gold will be then revalued by the system. It's not going to be an official revaluation linking it to currency, but because of central banks now are actually backing their balance sheet with real money, gold will be revalued to a level which will be correct for central banks holding gold as a reserve. So I think gold could go up 10 times to 20 times at some point, but not overnight. I don't see it. It's a gradual process. As more and more central banks acquire gold and hold gold as a reserve, and then obviously the settlement will be in gold also between central banks. I could see that is more likely to happen in the next few years than a currency being like a phoenix coming overnight, backing the whole of the BRICs. I know BRICS, they were talking about having, sound monetary system, and that's fantastic, and I'm sure they're going to go in that direction, but I don't see it happening overnight at all. So, but the central banks holding gold as reserves, I think that is an absolutely correct development, and is a good start building towards a sounder system again. So I think that would be very welcome, and I think it's quite likely that will happen. Also, it might take some time, but I think it makes sense. So therefore, it's very likely that it will happen.
Okay, right. I agree with those things as well. So I guess whichever financial class you may be in, it's good to be having yourself some sort of wealth protection right now for things such as gold.
Definitely, gold is not. Some people say you can't eat gold, but throughout history, in every period of crisis, gold has always become money, or been a medium of exchange that people can use, because there will always be a demand for something that has had value for thousands of years, and that therefore, as long as we don't get to confiscation of gold, there's absolutely, and I don't expect that to happen, not in a lot of countries anyway, because remember that, as I said before, only 0.5% of world financial assets are in gold. So it's such a small thing to confiscate. And people now that hold gold for wealth preservation purposes or investment purposes, they hold it in various countries. It's very difficult to confiscate now. So it's then easy to confiscate property or money in the bank, etc., or as I said, force savings into the treasuries, etc. So I still think gold will continue to play that role that it's always had in periods of crisis, and that's why you should always have a bit of your money into gold and silver, of course, also, which silver has obviously massive potential on the upside because of it's very, very oversold in relation to gold now. Whether it's manipulated or not, it doesn't really matter. It's cheap in relation to gold, and therefore some gold and some silver. I mean that's really everybody should hold that, and especially in the times we are expecting currently.
All right. Thanks for mentioning silver. I forgot to throw that in the question. I think a lot of people are gonna get mad at me a little bit there, but nonetheless, Egon von Greyerz, before we head out, can you tell us about Matterhorn Asset Management and Gold Switzerland?
Patrick, so this was we've been around for almost 25 years. It was really started as a way for our family and some of the people that we advised and invested with to protect the assets by holding physical metals outside the banking system. And we set it up on a private basis first, and then a few years later we opened it up for outside investors because there was demand, and now we have vaults and we have the biggest vault in the world with partners in Switzerland, biggest gold vault in the world, private gold vault in the world, and we store in Zurich also, and that the big vault is in the Alps, and then we store in Zurich, and we also have vaults like you in Singapore. But but our passion is really helping people to preserve wealth. It's not, we never knocked on any doors. We never tried to sell to people. We're really like you. We're telling people what our view of the world is, and the risks we see, and then we suggest that people should protect themselves against that. And that's what we're doing. We are really based on giving advice and service, and we have people like you from all over the world coming to us. We have quite high minimums we're appealing to a certain category of people. So we have in our vault in the mountain is $5 million. So it's very high minimum for a gold investment, and in other vaults is $400,000. So it's quite high, but we're trying to give a superb service to a more limited number of people rather than to try to help everybody. And there are very good people like yourselves and others who are helping people at lower levels, which is absolutely necessary also. It's just that we don't actually cater for that group. So that's what we're doing. We are, as I said, we are passionate about helping people. So and we hold their hands throughout the process and advise them. We love helping people because that's going to be necessary in coming years. And people will understand that soon, I think.
Absolutely. Egon, I'd like to thank you for your time. I hope we can do this again soon, and let's continue to see how things unfold.
Thank you, Patrick. It's always good to speak to you, and it's good also to have speak to someone who's also understands the problem from the inside, like you do, and your company, which is also, as I know, an excellent company in this business, helping a lot of people, whether we want it or not, there will be more people to be helped because that 0.5% of world financial assets will inevitably grow in coming years as people realize that wealth preservation was absolutely essential in order to survive the coming crisis. So we're there for them. Silver Bullion and Matterhorn Asset Management called Switzerland. So we're pleased to be able to help people, both of us.
All right. Thank you for that, Egon. Appreciate it. That was Egon von Greyerz sharing his views on the economy. To learn more about Egon's views and services, please visit goldswitzerland.com. If you like this video, please consider subscribing, sharing, and giving us a thumbs up. All are greatly appreciated. Audio-only versions of this interview can be found on iTunes and Spotify.